They told the French people the euro would be stronger, smarter, safer. But what they never told them was that their old money, the franc, didn't just disappear. It was buried. And behind that quiet burial was a story of inflation, denial, and collapse. For over a century, the French franc stood as a symbol of national pride, etched into every pocket, printed with generals, philosophers, revolutions. But when the markets turned and the politicians printed, it became worthless. France had to kill its own currency. Quietly, officially, forever. And now, the same warnings that surrounded the franc, debt, dysfunction, disbelief, are wrapping around the euro. Again, history isn't repeating. It's just finishing the story no one dared to finish. If you think Europe is immune to monetary collapse, ask yourself this: why doesn't anyone talk about the franc anymore? Because forgetting is the first step toward repeating. The French franc didn't collapse in a single night. It bled out slowly, decade after decade, until there was nothing left but nostalgia and silence. After World War II, France was economically devastated. The franc, already weakened by years of war and occupation, began its final descent. Inflation soared. Politicians made promises. Central bankers printed. Between 1945 and 1958, the currency lost nearly 99% of its value. The French government tried to mask the crisis with superficial reforms, but the rot ran deep. In 1960, the so-called new franc was introduced. 1 new franc, yea, 100 old francs. A reset, a trick, a sleight of hand. Charles de Gaulle called it a return to order. But in truth, it was an admission of defeat, a quiet funeral held behind closed doors. And yet the illusion didn't last. Throughout the 1970s and 1980s, inflation kept haunting the French economy. Fiscal discipline crumbled. Debt ballooned. Public confidence wavered. The franc, once a pillar of French identity, became a symbol of embarrassment. It no longer meant strength. It meant failure. So when the euro was proposed in the 1990s, French leaders embraced it, not as a bold new beginning, but as a desperate escape. Joining the euro was marketed as modernization. But for France, it was currency euthanasia. The franc wasn't killed by markets. It was killed by policy, by fear, by internal decay. And instead of fixing the foundation, they built a new house on the same cracked soil. The euro was born not out of strength, but out of denial. That's why no one mentions the franc anymore. Because to remember it is to admit what really happened. And now, as the euro faces inflation, fragmentation, and loss of trust, the ghost of the franc is back. Not in currency exchanges, but in warning signs. The story of the franc wasn't forgotten. It was buried because it hit too close to the truth. To understand what's happening to the euro today, you have to go back. Not to Brussels, but to Paris. Not to 2002, when the euro was born, but to 1945, when the French franc began to die. Because the death of the franc wasn't a natural collapse. It was a slow, painful, deliberate process, disguised as modernization, sold as stability, and executed with a smile. And what's more disturbing is that everything that killed the franc is now happening to the euro. After World War II, France was a broken country. Its infrastructure shattered. Its gold reserves depleted. Its national pride humiliated. The franc, once a respected and stable currency, had been devastated by the occupation years and Vichy collaboration. By 1944, it had lost nearly all real value. The black market ruled. Food was rationed. Confidence in the currency was non-existent. And still the government printed more. France had debts to pay, pensions to fund, reconstruction to finance, but no real money to do it. So they turned to the printing press. Between 1945 and 1958, inflation in France was relentless. Prices rose more than 10% per year, sometimes spiking far higher. The public grew accustomed to wage adjustments and disappearing savings. The franc was no longer a store of value. It was a temporary placeholder, paper you spent before it lost more power. The state solution wasn't reform. It was manipulation. Currency controls, wage freezes, new taxes, and behind the scenes, a quiet understanding. The franc would never recover. In 1958, Charles de Gaulle returned to power and promised order. His government introduced the new francs in 1960, exchanging 100 old francs for one new one on a dollar. On paper, it looked bold, a monetary reset, a psychological reboot. But it was just cosmetics. The economy was still structurally weak. Inflation still loomed. And more importantly, the political class had grown addicted to easy money. Instead of addressing the core dysfunction, they covered it with a cleaner-looking bill, a bill that still smelled of rot. Throughout the 1960s and 70s, the new franc stumbled forward. For a moment, it looked like France had turned a corner. Growth returned. Wages rose. But the illusion was thin. Every global shock, oil crisis, currency fluctuation, interest rate shift, hit the franc hard. Unlike the German mark or the Swiss franc, France's currency had no deep trust. Markets remembered the inflation. Investors remembered the tricks. And by the 1980s, it was clear the franc had become a liability, not a strength. What followed was a series of humiliations, devaluations, emergency interventions, pegging the franc to the German mark in desperation. France, once a monetary power, had become a follower. It could no longer control its own fate. The currency that once bore the face of liberty, revolution, and national honor was now a political orphan, dragged along by others, mistrusted by markets, and forgotten by its own people. So when the idea of the euro arrived, France jumped. It wasn't confidence. It was exhaustion. French elites saw the euro not as a shared vision, but as a way out. Out of currency mismanagement. Out of national blame. Out of the shame that had festered since 1945. They didn't fix the system. They buried it. The transition to the euro was framed as progress, but for France, it was a surrender. A quiet admission that they couldn't be trusted with their own money. The public didn't fight it. By then, the memory of the franc's strength had been erased. Young French citizens had never held a stable franc. They only knew inflation, devaluation, empty promises. So the euro felt like an upgrade, until it didn't. Today, as the European Central Bank grapples with inflation levels not seen in decades, the same fault lines reappear. France's debt is once again ballooning. Public services are crumbling. The gap between political rhetoric and financial reality is growing. And worst of all, the ECB has inherited the exact same disease that killed the franc: denial. In the 1950s, French officials insisted inflation was temporary. In the 2020s, ECB leaders do the same. In the 1960s, they promised price stability while quietly devaluing. And in the 2020s, the ECB prints hundreds of billions and calls it support. The mechanisms have changed. The language has evolved. But the psychology is identical. Protect the illusion at all costs. And this is the part no one dares say aloud, because it cuts too deep. The euro didn't replace a strong currency. It replaced a failure. And now, that failure is bleeding into the heart of the euro itself. The cultural amnesia surrounding the franc allows history to repeat unnoticed. But the markets don't forget. The bond traders don't forget. The capital flows don't forget. And as global trust in fiat systems wavers, the euro's fragility is becoming harder to hide. When the franc collapsed, it didn't take down Europe. But if the euro collapses, the entire union cracks. That's the risk they never had with national currencies. The ability to isolate, to restructure, to rebuild. Now every crisis is shared. Every failure is amplified. And every warning ignored is multiplied. The forgotten story of the French franc isn't just a footnote in economic history. It's a blueprint. A warning. A faded photograph of what monetary decay looks like, masked by pride, prolonged by politics, and ended not by courage, but by escape. And for those who believe that today's institutions are stronger, smarter, or more responsible, Ask yourself this. How many people once believed that about the franc? Currencies don't die overnight. They corrode from within. Until one day, the numbers no longer mean what they used to. The paper feels lighter. The promises feel emptier. And the silence around the past becomes too loud to ignore. That's when the collapse begins. And it's never a surprise, except to those who chose to forget. For over 100 years, the French franc was more than money. It was identity. It carried the weight of revolutions, the pride of resistance, and the image of French greatness. Children learned to count with francs. Workers saved them in battered envelopes. Farmers traded them in dusty markets. Across every village and arrondissement, the franc was a constant, a quiet companion to daily life. But when it began to fail, it didn't just destroy savings. It destroyed something far deeper. Trust, debt, dignity, memory. That's the part most economists miss. The collapse of a currency isn't just economic. It's personal. It infiltrates the psyche of a nation, replacing confidence with doubt, optimism with shame. And for France, the slow death of the franc mirrored the slow unraveling of its post-war illusion that it could be a global leader. That financial system was sound. That future was secure. These weren't just ideas. They were woven into every banknote. So when the franc faltered, those beliefs faltered too. In the 1950s and 60s, French families learned to adapt to inflation like it was weather. Prices changed, wages chased, and everyone pretended things were normal. But behind closed doors, the anxiety grew. How do you plan for retirement in a currency that forgets its value every year? How do you build a future when the ground beneath your wallet keeps shifting? People didn't riot in the streets. They adjusted. They normalized the absurd. That's what makes currency collapse so dangerous. It doesn't scream. It whispers. It erodes silently until disbelief becomes routine. The political class treated it like an accounting problem. Just remove 2 zeros. Just rename the bills. Just launch a new franc. But the public wasn't fooled. They might have accepted the lie, but deep down they knew what it meant. That the state had lost control. That their labor was being devalued. That money, once a promise, had become a threat. And that realization never fully healed, even after the switch to the euro. When the euro arrived in 2002, it was supposed to be a rebirth, a union of strength, a break from the past. But for millions of French citizens, it felt like betrayal. The coins were unfamiliar. The notes carried foreign symbols. And most importantly, they no longer felt French. It was a currency without memory, a currency without soul. And in a country where identity runs deep, that loss mattered. The euro wasn't just a technical shift. It was an emotional rupture, one that was never truly reconciled. And now, as the euro faces its own credibility crisis, the emotional ghosts of the franc return. You can hear it in the frustration of workers whose salaries don't keep up, in retirees watching their pensions dissolve under inflation, in voters turning to extremes, desperate for anyone, to restore control. It's not just about policy. It's about trauma. The trauma of watching your life's work lose meaning because someone far away adjusted an interest rate or printed another 100 billion. The tragedy of the franc wasn't just that it died. It's that its death was never grieved, never examined, never owned. France moved on because it had to, but it never looked back. And in doing so, it left its people carrying the quiet weight of unresolved collapse. That weight is now shifting onto the euro. And unless Europe confronts the emotional cost of monetary decay, it will repeat the same mistake, believing that people forget. They don't. They internalize. They adapt. And one day, they snap. What makes this story dangerous is how invisible it feels. There are no burning buildings. No headlines screaming collapse. Just rising prices, declining faith, and the slow, suffocating realization that something fundamental is broken. That's exactly how it felt with the franc, and it's how it feels again now. Currencies don't just reflect economies. They reflect national psychology. When the franc lost its credibility, it took part of France's confidence with it. And when the euro finally cracks, whether from inflation, fragmentation, or political fracture, it won't just be another crisis. It will be a reckoning, a moment when millions across the continent realize they were never protected, just pacified. The French franc story isn't over. It's simply been renamed, and it's about to be repeated. The euro was never just a currency. It was a political project, a monument to unity, forged in boardrooms and treaties, not trenches or trust. And from the very beginning, it carried a fatal flaw. It demanded shared sacrifice without shared control. France knew this. France lived this. Because long before Greece buckled or Italy drowned in debt, France had already tested the limits of monetary illusion with the franc. It knew what denial looked like. It knew what collapse felt like. And yet, it helped build the euro anyway, because the alternative was to admit failure. In the 1990s, as the European Union expanded and the Maastricht Treaty took shape, France stood at a crossroad. On one side, restore its own monetary discipline, regain credibility, face its past. On the other, bury the franc, adopt the euro, and let Germany's reputation shield its weakness. It chose the latter. But this wasn't strength. It was a calculated escape. French leaders knew the euro would constrain them. They knew they'd be tethered to ECB rules, German expectations, and market discipline they had failed to uphold for decades. But they preferred the illusion of shared success over the responsibility of sovereign reform. And so the euro launched, with a wounded France hiding behind a stronger mask. For a while, the disguise held. Bond yields dropped. Capital flowed. The French state could borrow cheaply again. The euro was branded as the new mark, disciplined and trustworthy. But that trust was borrowed, not earned. And like all debt, it came due. When the 2008 crisis hit, France scrambled. Its banking sector trembled. Public debt exploded. Austerity politics returned. And for the first time, the dream of monetary union began to crack. Germany pushed for stability. France pushed for flexibility. Southern Europe demanded survival. And the ECB did what the franc-era politicians had done decades before. It printed. Quietly. Relentlessly. Eurozone leaders called it support, stimulus, monetary easing. But to anyone who had lived through the France fall, it all felt too familiar. Because behind the rhetoric of stability, the same dynamics were unfolding. Inflation wasn't transitory. Trust was eroding. And just like the old days, the average citizen began to feel poorer, while the elites called it recovery. The euro, once marketed as the solution to currency instability, had become the very machine that reproduced it, only on a continental scale. What France did with the franc, print, deny, collapse, it is now experiencing again under a different name. Only this time, it can't devalue. It can't reset. It can't hide behind a new franc. Because it doesn't own the printing press anymore. It outsourced its last tool of sovereignty. And now it's stuck in a structure it helped design but never truly believed in. This is what makes the French story so revealing. It exposes the lie at the heart of the euro. That discipline can be imposed top-down, and history can be rewritten by committee. But currencies aren't built by treaties. They're built by trust. And trust doesn't survive when people feel powerless. The euro may still function. The institutions may still stand. But France knows better than most. A currency can be alive on paper long after it's already dead in the minds of its people. And when that happens, no speech, no bailout, no interest rate can bring it back. Only truth can. And Europe isn't ready for that truth. Not yet. For most people in France today, the franc is a relic, a museum piece, something their grandparents used before the modern world arrived. But markets have longer memories than voters. And the deeper truth is this: the financial system never forgot how France treated its currency. It never forgot the devaluations, the resets, the political interference, the empty promises. And now, as cracks begin to form around the euro, that memory is surfacing, quietly but unmistakably. Investors don't just look at headlines, they look at patterns. And France's pattern is clear: high spending, weak reform, delayed accountability. The same signals that preceded the franc collapse, rising deficits, populist rhetoric, anti-austerity movements, are blinking red once again. Only this time, France isn't alone. It's tied to an entire monetary union. And every reckless move, every ignored warning, now threatens not just one nation's money, but the credibility of the euro itself. When the ECB loses control of the narrative, when inflation persists despite rate hikes, when political leaders promise more spending while debts pile up, markets react the same way they did in the 1970s. They hedge. They exit. They raise the price of trust. And trust, once priced in, doesn't come back easily. France may pretend it's different now, more stable, more integrated. But its structural weaknesses haven't vanished. They've been absorbed into the euro's bloodstream. And here's the dangerous twist. France no longer has the tools it once did to protect itself. It can't print. It can't devalue. It can't walk away. The very escape from the franc failure, joining the euro, has become a trap. A beautiful, rigid, slow-moving trap. And the moment markets stop believing, that trap springs shut. Not overnight, not loudly, but relentlessly. Just like the franc outing. And by the time anyone admits it's happening, it already has. When currencies die, they don't explode. They dissolve. Quietly, silently, and always with denial. The French franc didn't vanish in a crisis. It withered under decades of inflation, lies, and political cowardice. And when it was finally killed off, there was no outrage. Just silence. A nation turned the page without reading the last line. And now, the euro walks the same path, built on fragile consensus, driven by debt, and haunted by the ghost of a forgotten currency. The difference this time is scale. The euro isn't just France's burden. It holds together 20 economies, 340 million lives, and trillions in obligations. And while politicians insist it's too big to fail, that logic only makes the failure slower, not less certain. Every delay in reform, every manipulated interest rate, every ignored warning, adds weight to a structure already groaning. The next collapse won't come from a vote or a headline. It'll come from a million small decisions, capital quietly moving out, savings losing meaning, trust thinning with each ECB press conference. It will feel like stagnation, then stress, then disbelief, until one day the numbers won't add up and there will be no reset button left. France taught us this lesson once. We chose to forget. The euro was supposed to be the answer. But if that answer came from a place of denial, the question was never solved. The forgotten story of the French franc isn't just history. It's a warning flare. One we ignore at our own peril. Because the scariest collapses aren't the ones we see. They're the ones we don't admit are already happening.